Hey y'all, it's John. Welcome to my private volcano. I thought this would be an appropriate setting to talk about what to do when all your gains are on fire and you're losing in your wheel strategy position. So I'm going to go over a couple ways of how to manage that position if you're losing the trade and how to exit out properly. Time for some knowledge. Now, of course, the first thing you can do when managing a wheel strategy trade is roll the position. So if you sold a call or a put and it is going against you, you can always roll the position. So again, I'm on Robinhood, the brokerage I use, and they have a roll the position button. So typically, rolling the position is buying the contract back that you sold and then selling another one further out and then at a lower or higher strike price depending on what you did. So if I wanted to roll my $27 put, and let's say I wanted to roll it lower, I could buy this back for 66 bucks and the roll down for 70 bucks for the next week. So I'm adding more time and then I still collect $4 more on these contracts. So this will work if the price is around where you sold the put or sold the call, because then you can push it out a little farther. It doesn't work exactly if it blows past your call or put, and then you're kind of stuck because you'll have to pay so much to buy that contract back. But this is one way to keep rolling out, and then you'll collect a decent amount of premium along the way. And then if you're selling calls, you'll get higher and higher and higher, so you'll be able to collect more premium. So if I was selling calls, let's say I rolled out to 27, then 27.5, then 28, right? If I got struck out at 28, I'd collect another $100 plus the premium along the way. So rolling is the most obvious choice if appropriate. Now let's say rolling is not really an option. It completely blew past your strike price, and now you're deep in the hole. If you roll, you're going to take a big loss, and if you buy out the contract, you're going to take a big loss. So you can do nothing and just let it play out. If you really think you're getting this stock at a good deal, why not just buy it and take the L for now? Because it might come back if you really believe in the stock. And that's why you're wheeling stocks, right? Because you want to owe them because you know you're going to owe them, right? So keep that in mind. And then if you collect dividends on the stock, that's really not such a bad deal because you're going to be collecting dividends along the way. So keep that in mind. Maybe you can do nothing and just collect dividends in the meantime. That is a viable option. You can do nothing. Now, if you're really ballsy and really believe in the stock, you can double down on the stock. So a stock I'm wheeling now is Rocket Mortgage, and I did buy shares at $9. So you can see it's at $8.64 at the time of this video, but I'm really up because of all the premium sold. But let's say the stock keeps dropping to $8. I'd probably double down because it has a 200 moving average support. You can see there's a lot of support on the chart, and I really do think Rocket Mortgage is going to be a good company. Plus it has meme status material, as you can see the pumps not too long ago. But besides that, I really do think Rocket Mortgage will be a good company when the housing market goes back up, and it's a Detroit-owned company, and I can see the things they're doing downtown, and I can see their influence in the area. So it's a good stock for me. So this would be something I'd be comfortable doubling down on at a certain price point. Now let's say this drops all the way back down to around $6. That might be a little different for doubling down, depending how many contracts I want to do. But doubling down can be an option, but you also have to keep in mind how much is the stock going to be. Doubling down on Google is going to be a lot different than doubling down on, let's say, Rocket Mortgage. So keeping the price in mind, how much research did you really do on the stock? Does it have a good reason to go up? Are going to be good factors to determine if you're going to double down. And if you're going to double down, you can decide just to buy them and just sell calls, or you can sell puts and collect the premium until you get assigned again. Now, we can also use technical analysis to inform our decisions what to do. So step number one could be looking for support and resistance zones. So let's say we can stick with Rocket Mortgage. Let's say we're being silly and we saw this giant pump and we wanted to sell a put at $10, right? Comes crashing down and now we're back at $8-ish. So we're going to be down around $200 at this time right here. So we can decide at this decision, what is the trend doing? Are we chopping sideways? Are we diving downwards? That depends, right? We can see it's forming a base on the simple moving average, the 200-day. So this might be something to stay with because you can see it's catching support. We can also look at just normal support and resistance levels, right? So we can see a lot of support at this level where my mouse is. We can see the next support zone would probably be down around 650. So would we be okay holding it at 650? If not, consider maybe selling if it doesn't hold the $8 range support level. So these are going to be all important things to know. Let me draw these out for you guys here. So we can see there's a decent amount of support right here. And we can also see there's a decent amount of support right here, right? So these are the two major support and resistance zones. So is it around that? It might be considered keeping if it's holding. If not, maybe it's time to sell. Now you can also use some indicators, and I don't use many. I really only use the 200-period moving average, MACD, and sometimes RSI. Now you can use these to make informative guesses. I say guesses because no one really knows what's going to happen in the stock market. But you can see at the MACD, if you had like a crossover down here, it would have been okay. Same with down here, you would have been okay. And same with over here, you could have been okay. So maybe if there's a crossover, it's going to enter upward trend again. So there might be something to keep out for. You can also tell on the oversold, like this was not a good oversold signal, and then it dumped lower, right? But you can see at a lot of oversold signals, it did mark a somewhat of a bottom. So if the bottom wasn't too far from your assigned price, maybe it's something worth keeping. So technical analysis can be useful in deciding what you want to do with the stock. And with technical analysis, you can decide when to sell covered calls if it's below your basis, right? So let's say I got assigned around here, around like $10 again, and then it drops all the way down. I can wait till it gets oversold again to sell a covered call. Rocket does weeklies, so this one would have been okay, right? So I could have saw oversold here. I probably wouldn't have done it on this one, but I could have sold another covered call over here when it was oversold. You can also do on the MACD if it's hitting a crossover. Maybe it's now not the best time to sell a covered call under my cost basis because it's in an upward direction, right? So you can use technical analysis to decide when to sell covered calls below your cost basis. It is risky. You do run a chance of getting assigned, but if you want to gamble and collect that extra premium, you can use technical indicators to decide when to sell covered calls below your cost basis if it's that bad. Now, if you're just done with the stock and you just want it gone, you can just sell the stock and collect the loss, then you can write it off on your taxes. Or you can also sell calls at the current price, at the money, and just see what happens. Maybe it dips lower and you collect that premium, and then you just can keep collecting it till you're called away. Now, something a lot of people don't do is sell in the money calls with a far out date. This is a viable strategy because you can actually still make money selling in the money covered calls. So I pulled up Tesla as an example, and we have it 30 days out. So you can see the current price is $161.70, and you can sell it in the money covered call and collect money almost up to $120 down. And it'd be about break even to the current share price. So let's say, you got assigned a little higher. You could sell it in the money covered call, and then if it drops down, you're covered on that way down, and then you can keep collecting as it falls. So selling in the money covered calls is a viable option because you can still make money. If it stays at this price, I'd still make about $300 on the current share price. So it just depends what you want to do. You can sell in the money covered calls or at the money covered calls. And these are viable options if you want to get rid of the stock, and you'll most likely get assigned. So these are how I manage my wheel trading positions. I typically just sell covered calls under my cost basis, kind of doing some technical indicators, and I see when is a good time to sell it. This hasn't happened in a long time because a lot of things were down when I was selling puts, and I haven't got assigned recently, so it's been going well. But keep these strategies in mind, and if you don't want to wheel stocks, I do wheel a lot of ETFs mostly, so check out this video here. Peace.